Are you interested in investing in Treasury bills directly because you want to get a higher return than your bank is giving you? Well, you've come to the right place if you want to learn how to do that. I'm Professor Capko, and I'm going to show you how easy it is to buy treasuries directly from the Treasury Department in today's video. But first, I want to say I believe something great is going to happen for you today. And now back to the video. If you're someone who likes learning about personal finance, accounting, law, new ideas, give this video a thumbs up. That way the YouTube algorithm will know that you're the type of person who likes to be knowledgeable about what's going on. Thank you. I'm also trying to get to the 4,000 hour public watch time within 365 days as is required by YouTube. I'd appreciate it if you would watch as many of my videos as possible. I've got some longer form content, some relaxation and study videos that you can put on in the background and listen to while you're studying or relaxing. I'd really appreciate it. Thank you very much. Today, we're going to talk about buying treasuries. I did a video recently about buying treasuries through the app public.com, and I've linked that video up here in the corner if you want to watch that one. That is not the only way to buy treasuries. What are treasuries? In short, treasuries are government debt. Your federal government goes out to borrow money to cover whatever it is that the federal government is spending money on. And whether or not you want to invest in treasuries or whether that's the best choice for you is completely up to you. This is not financial advice, accounting advice. This is not tax advice. This is not legal advice. All I'm showing you for educational purposes, the process. If you decide that this is right for you and your family, this is one process that you can follow to see how to do it. So we're going to set up an account together. But first, let's talk about treasury bills. And I'm going to start with this article here from the Daily Hodl. And this was published on June 12th, 2023. U.S. Treasury to borrow $1,100,000,000,000 in 6 months. Analysts warn move may trigger banking exodus. Report. This is by Alex Richardson. Analysts say the U.S. banks could suffer a massive flight of deposits if the Treasury goes ahead with a plan to restore cash balances by borrowing over $1 trillion. JP Morgan analysts estimate the U.S. would need to borrow $1.1 trillion in short-dated Treasury bills by the end of the year. The higher yields now expected on government debt will suck deposits out of U.S. banks as customers become unsatisfied with the inferior returns offered by their savings accounts. Put down in the comments how much your bank pays on savings accounts. The U.S. average as of the day of this video is about 0.25%. Now, when you put money in the bank, it doesn't just sit there in a vault. They use it. The bank uses it to make money. And one of the ways that the bank uses your money is by investing in treasury bills. That is, they're lending the money to the federal government and they earn a higher interest rate. And we're going to take a look at what some of the interest rates are today. And they are, of course, always changing. So always check what the rates are as of the time you're ready to proceed with this. But essentially, the last time I checked, it was above 5% for a 6-month treasury bill, which means that your bank could take the money that you have lent them, and yes, that's what's happening. You're putting it in a savings account. You're lending the money to your bank. They take it and they buy treasury bills with it, and they earn over 5% on that investment. And they turn around and pay you 0.25% as a thank you for their using your money. And you get to be an unsecured creditor as a result. In other words, if the bank were to go bankrupt, you only have the right to collect from the FDIC insurance, and you need to look at what the limits are on that to make sure that your accounts are below the legal limit for FDIC insurance. Now, I'm going to show you how to purchase Treasury bills through Treasury Direct, which is the Treasury Department of the United States. These are not FDIC insured. They're insured by the U.S. taxpayers. In other words, the taxpayers are paying this money back to you. So if the government defaults on this debt, and we've heard a lot in the news about the government defaulting, there's going to be a lot of problems in the economic world. But default is always a risk. There's always a risk in every investment. So you have to weigh that in what's best for you and your family. But if you decide that you want to invest in Treasury bills, we're going to go through the process here. Here's a quote from Goldberg, a strategist at TD Securities. Everyone knows a flood is coming. Yields will move higher because of this flood. Treasury bills will cheapen further, and that will put pressure on banks. Again, Treasury bills are a type of bond. So I've put a video linked up in the corner of a background on what bonds are and how they relate to interest rates. But understand, as an interest rate goes up, the price of a bond or a treasury bill goes down. It's an inverse relationship there because you're buying it at a discount, and then at the maturity date, be it 1 month, 6 months, 1 year, whatever time period it matures, you get paid back the full amount. And usually these are in $100 increments. So you buy it for less than $100, and then it pays off to you $100 on its maturity date. And that difference between the discount and the amount you get paid back is your interest. So obviously, if the interest rate's higher, you will pay less for that T-bill or that treasury bill and still get that $100 at the time of maturity. You want to know when it matures and what the deadline is. And again, I want to mention, if this is money you're putting into a treasury bill and it's money that you need right away, don't do it. You have to wait till the treasury bill matures to get your money back. Yes, you could sell the treasury bill to somebody else, but you cannot do that directly. You have to get it sent to a brokerage house, and they have to sell it, and they're going to collect a brokerage commission likely from doing that. So it's not a simple process to get your money out early from a treasury bill. So only put money in here that you don't need until after the maturation date of the treasury bill. If you want to have it a little bit easier to get in and out, but maybe pay more fees, look into the public.com video that I linked earlier, and it might be a little easier to get in and out because public.com is already a broker and they are collecting fees on that process. So keep that in mind. All right, so we're now seeing that the rise in yields could force banks to raise their deposit rates. That would be a good thing, but this could exacerbate the stress we're already on the banking system. So you need to make sure your money is in a safe place. There's already been a $910 billion in deposit flight since May of 2023 as of the data. So that is money that is leaving banks and going into other investments. Treasury bills is one example of where they're going. So let's take a look at how to do that. So we're going to go to Treasury Direct, and that is www.treasurydirect.gov. And this is what it looks like when you land on the page. If you already have an account, you would log in here. I do not. We're going to open a new account, and you want to read everything carefully. Make sure you know what you're getting into. I am not advising this in any way. I'm showing you what I'm doing so you know the process. Step 1, you got to choose the type of account you are opening. Step 2, provide personal information including tax ID number, social security number, or EIN, which is employer ID number. email address, bank account, and routing number. And then also step 3, then you have to do a password reminder, personalized image, caption, and security questions. So we're going to go ahead and apply. And it asks some questions here. Do you want an individual account that you as a regular person can get, or is it going to be a corporate account, a partnership account, a limited liability company, professional limited liability company, a sole proprietorship, or a deceased estate, a living estate, or a trust? So you want to choose the correct entity, and what is the correct entity for you is beyond the scope of this video. I am choosing an individual because I'm doing this for myself, and I'm going to hit submit. And now it's going to ask some information. The next step is they'll ask you to pick a personalized image and statement. So you will know that it's your account when you're logging in and not a fake entry. Next, after you choose your image and statement, you will then pick a password and a password reminder and 3 security questions. And that sets up the account. I go back to the first page and log in. Before you log in the first time, you'll need to check your email because they'll have emailed you a account number. That account number may have a letter to start with it. If it does, then you would go next and to where you log in, and you would put your account number here. And I'm going to pause while I do that. Then as it says here, they will email you a one-time passcode. It will be in your email. I'm just going to copy and paste it to here. Once you enter your one-time passcode, it then takes you to your password entry. It'll show you the image that you chose along with the phrase that you chose. Go ahead and put your password in, and it takes you to this page, and it shows you the amount of your securities that you have. And you see various ones you can look at. And from there is where you're going to fund it and go ahead and buy your direct holdings. So let's look at the buy direct. This is where we can learn more about it, including savings bonds, your current holdings, which I don't have any in here, and account info, history, investor inbox. So that is how you set up a account at Treasury Direct to purchase your Treasury bills directly from the government. That's all I have for you in today's video. Best of luck with your investing, and go ahead and subscribe to my channel and hit the notification bell so you never miss a video. Thank you.